Well, looking at the level on the Naira, it's still making headlines this week. There are strong arguments for currency devaluation with hope of some intervention from the CBN to come through to keep the Naira within that 3% crawling peg range of 145.50 and 154.50. What have you made of the kind of movement we've seen on the currency front since the last time we chatted, which was roughly a week ago?
Yeah, well, there's no question that the currency's been weak. I think the central bank's been very clear that it views the current surge in demand as being temporary. So I think while that's the case, it's probably pretty happy to let the Naira sort of trend towards the lower end of the band. And I personally agree with the central bank. I do think you see the demand for US dollars go up and then happily afterwards it tends to go back down. So I think for the time being, the Naira is likely to be on the lower end of the band, and that might change in a couple months' time, but I don't think the peg is about to be broken.
What market commentary has been is that, when it comes to the outlook on exchange rate policy, we've got market commentators saying that things look pretty uncertain right now. We had Vativa Capital Management saying that it suggests that we have we've naturally transitioned into a floating exchange rate regime. To what extent do you agree with that kind of commentary that's out there?
Well, it's difficult to judge. Right now, the central bank has three options to try and stabilize the external position. One, it can try and raise policy rates, which it has been doing, which it hopes will attract more foreign capital. Two, it can try and push structural reforms to try and reduce import dependence, which it also has been doing, but is clearly not going to change overnight. And three, you can solve the problem very quickly with the nominal devaluation. The problem is, if you do devalue, then that makes things difficult for quite a lot of companies that have import costs, obviously in dollars, and it makes things difficult for consumers who are also, exposed to commodity imports priced in dollars. So it's quite a difficult position for the central bank, and I think up until now they've been clear about the fact that for now the policy is a peg. Whether that's the policy in 5 years, well, it's hard to say, but I think over the next 6 months, I don't see that changing.
As you've just said, foreign capital inflow could be one support factor that, could have a bearing on this currency moving forward. That would be dependent on the kind of investment case that Nigeria actually puts on the table to a large extent. From your perspective, what's your reading of that investment case that Nigeria presents to the market?
Well, I think the investment case is definitely there. It has been there for a few years right now, and probably you'd want to separate investors into two categories: those that have had exposure over the last 3-4 years, and those people, perhaps rightly so, are a little bit disappointed with the way the market's performed, and then those who are looking for a new exposure to Nigeria. And I think those looking for a new exposure will agree that things are quite cheap right now, and the prospects look very good. So it's a question of dividing it into two categories. But I think in general the case is recognized as being fairly good. Global markets are very difficult right now, so it makes it all the more difficult to press Nigeria's case.
Of course, Alan, you're visiting from the UK. You're in Nigeria attending a conference that's currently being held on the economic roadmap, for Nigeria. What's this conference looking to achieve, and what sense have you gotten out from it so far, given the fact that we had this conference starting yesterday?
Yeah, I think the overall goal of the conference is to bring together international and domestic investors and expose them to some companies that they may not have heard of. So that includes companies that are already listed and some that perhaps have plans to list over the next 6 to 12 months. So that's the objective. And I think overall people do like the story, and what is exciting is there probably will be some opportunities to buy into segments of the economy that have not been available to investors before, whether that includes, agriculture or up-and-coming oil and gas companies. So I think the sense is pretty good. There's a recognition that the global markets are difficult, and, if, for example, you're running a GEMS fund, it's probably not the ideal time to be looking at Nigeria, but that doesn't change that the investment case is there, and I think there is a general consensus that the prospects are good for the next 5 to 10 years.
Aside from investors just getting to know companies, there's a lot of talk as well about the kind of reforms that have been underway in the country, and chief amongst that, or a big part of that, is financial markets regulation and reform itself. What sense have you gotten from investors that are attending this conference in terms of their sentiment towards the kind of stride we're seeing in reform on that end?
I think the general sentiment among investors is that things are moving in the right direction. We had the head of the Nigerian Stock Exchange come and speak, and as far as I could gather, the response from investors was quite good. So yeah, things are moving in the right direction. I think they're not always going as quickly as people would hope. As you know, there's been plans to demutualize the stock exchange for quite a long time now. But I think the sense is with the Jonathan administration, the right ideas are there. The questions are, whether the implementation is going to come. And I think on that front, opinions are more mixed, but on balance, I think they're pretty positive.